Good afternoon, everyone. Thank you so much for joining. Apologies for the slight delay there. Just had a couple of technical issues, but that's okay. We sorted it out. Great to see so many people joining today's webinar. We've taken a little bit of a break from last week, but a lot of our clients have been searching and asking us for what's been going on in the market, particularly with the rising geopolitical tensions, Russia, Ukraine, China, Taiwan, a lot of things that are concerning not just ourselves, but of course our investing career as well. So today, presented by myself, Marcos, portfolio manager, and we'll get right into it. So just a quick disclaimer, of course, all advice within this webinar is just general advice only. Feel free to consult your professional financial service advisor or broker. All right, next one. There we go. So we're going to take a look at what's been happening. There's been a lot of macroeconomic news coming out of the last couple of weeks, particularly with US retail sales, Australian unemployment, what the Fed is doing, etc., and a couple of our top stocks to actually take advantage of that as well. So we're seeing a lot of mixed signals. Navigating the impact of inflation, right? We've seen State Street, for example. We've seen the quarterly earnings reports coming out of the US. A couple of them have been quite good. Citigroup has done quite well. JP Morgan also done quite well. And State Street, which is a notorious short seller, particularly of Australian stocks. If you know anything about short selling, you definitely don't like State Street. Their share price dropped about 10% yesterday, which, you know, just for you guys, I wasn't too fussed about. So that was quite good. But you know, of course, the primary concern domestically, taking a look at the Reserve Bank monetary policy, we've of course decided to pause for the April month meeting, and that's okay. We're currently sitting about 3.6%. Unemployment is still quite steady at 3.5%. It's the lowest that it's been over in 40 years, which is okay in a normal economy when things are relatively bullish. However, right now, of course, the increase of the monetary policy, of course, is to resist and actually decrease the demand side of the economy. So they're looking for, of course, the unemployment rate to rise a little bit, and of course, for the inflation rate to come down. Core inflation remains pretty steady at about 6.7%. Headline inflation still remains relatively higher than that. So overall consensus for May is at least another 25 basis point hike, and possibly another one either in August or September. That's our consideration there. All right, so yeah, there we go. And you can see here how that effect has well, actually directly impacted the market, right? So the April meeting minutes was quite a concern. We were quite happy. You can see the bank crisis there in the middle of, at the end of March with the Credit Suisse UBS takeover. All right, and you can see there in April where the RBA kept the cash rate steady, and now we're seeing a little bit of a pullback. All right, we're seeing a little bit of a pullback, particularly after the results of the RBA meeting minutes, which essentially has maintained the fact that, yes, of course, the tightening of monetary policy will still be in effect over the next couple of months. So that's something that we're definitely taking a look at. And of course, that takes a look at a different bunch of stocks as well. So I've spoken previously of how, particularly now, the ASX 200 is currently sitting about 73.40. The investment criteria has always sort of been saturated to the top end of the stocks, the big blue chips, right? BHP, CBA, CSL, NAB, Westpac, right? However, what's interesting over the last couple of weeks, particularly, BHP has remained relatively relatively stagnant. CBA has come off its all-time highs of 110. It's currently situated about $99. CSL, very similar. And NAB and Westpac as well, also trading about 10% off their all-time highs. So discretionary tech and telco, they've been outperforming. You can see the discretionary sectors year to date has gone up 13%. Tech stocks up 12.24%. Telecommunications and industrials also following a very similar vein. Is it the right time to invest in IT stocks? I get this question pretty much every day. If I had to summarize in one word, no, not yet. The reason for that is, particularly with the information technology stocks on the ASX, the stocks are quite saturated. All right, you've got quite a few stocks on the ASX. If you take a look at the XTX All Technology Index, it's about 30% down in the last 12 months, and the vast majority of those and contributing factors to those have been buy now pay later stocks as well, ZipPay, Sezzle, EML, etc. Have not been performing really well. However, there are a couple of stocks that are outperformers. WiseTech, WTC, WiseTech Global has been an absolute outstanding stock, something that we've been discussing with our members as well. Iris as well, IRE, has done quite well. Does it mean that all the tech stocks are going to be performing well in the next 6 months? No, definitely not. And that's why we need advice, right? And so we're taking a look at a couple of stocks to safeguard against portfolio inflation, all right, and a couple of stocks that, for example, we've recommended, and the number one being Codan, right? Codan has been one of the most, least loved stocks on the ASX over the last 12 months. I should put it that way. They have various, if for any of our webinar viewers who don't know what Codan does, Codan provides a lot of manufacturing and communication solutions, particularly to the military. A lot of drone hardware, things like that, a lot of automated and communication satellite solutions as well. And they've done quite well over the last 12 months, despite the share price movement. They've established their asset base and they still maintain about a dividend yield of about approximately 4%, which is quite good. All right. And of course, the thematic around why we're recommending stocks like Codan, particularly when they've dropped from about $12 to now $6, right? It's not necessarily saying, oh, it's a contrarian play, right? Anyone can say it's a contrarian play, sure. But now, given the fact the rising geopolitical tensions across the globe, not just in Asia, but of course, in North America and Eastern Europe as well, Codan is looking to branch out, particularly to get a little more contract servicing, particularly within Eastern Europe as well. So for the first half of FY23, they got about $211 million in revenue, which is great. Of course, it was down 18% on the previous corresponding period. That's okay. But you can see there the chart on the right-hand side, the profit and loss. The revenue from the communications sector has actually increased. And when I say the communications sector, is particularly the communications within that satellite business model jurisdiction. The metal detection sector is essentially just exactly as it says, metal detection, high quality metal detection products that are used via, either individuals or primarily via a lot of geologists looking to explore and look for tenements within particular gold mines. All right, so now we've seen a little bit of a pullback within that share price, and we're still expecting quite a strong expectation, particularly within that communications segment that I was speaking about before. So that communications segment order book is looking to increase to about 173 million for the full financial year. Lovely. And so, yeah, and then they have a strong pipeline of projects, all right, particularly within that metal detection, right? That's about 34%, but 66% of that comes from that communications revenue, which is quite good. All right, next slide there, please, mate. Yep, perfect. And, you know, they're looking to have a full solutions provider. You know, they've got well established product bases with their Mine Lab, which is the metal detection space, Coding Communications, and Zetron as well. They're looking to advance their communication sector, particularly within that military space. Okay, and so far, as I said, despite all the talk and all the figures, you can't complain with that share price. CDA is up 62.3% year to date. Very, very happy with that. All right. So the next one that we've got, all right, is Origin Energy. Origin Energy is one that we've been covering for quite some time. We've been covering here at Stock Specialist for about 24 months, Origin Energy, and we've been covering it, and we picked it up about $5, which has been quite good, and we're looking to actually seize that profit. So we get a couple of figures here. Statutory profit is up 530 million, and their return on capital equivalent, the energy market ROCE, a little bit down, but the integrated gas market is something that I wanted to mention as well, because Origin Energy, of course, primarily within the primary coal and energy markets, but the integrated gas and LNG markets is something that has been relatively underlooked, particularly within the domestic, Australian energy market. All right, so if you take a look at this next slide, they've got quite a lot of brand awareness, right? They are slowly accelerating into the renewable energy and cleaner energy solution, and they're looking to decarbonize their portfolio, consistent pathway, aiming for net zero within the next couple of years. And it's not something that I actually mentioned in the slides. I don't know why, but they also do have a prospective takeover offer that is still within the works. A lot of due diligence still has to be going on with that. Yeah, so we're currently sitting there. It's up over the last 12 months about 25.9%, currently sitting about that $8.30, $8.40 mark. And the takeover offer is indicative of approximately about $9 target price. All right, whether that goes through or not is a different question, but so far so good. Okay, the last stock I wanted to talk to you about is our old friend Bisalloy Steel. Bisalloy Steel, high quality, high tensile steel manufacturing products, particularly within the mining, defense, and construction business. All right, I'm sure you've heard of the Bushmaster. All right, that's a little bit of our hidden gem. The Bushmaster military vehicle being utilized, particularly there in Eastern Europe, and being shipped across the borders. Right, currently sitting about $2.04. We've been recommending it since, a hell of a lot lower than that, and a dividend yield of 6.4% approximately, fully franked as well, I might add. Okay, all right, so you can see there that big jump, right, particularly off the back of the Eastern European, the Ukraine and Russia war there in FY22, taking a look at that massive increase in EBITDA as well, and taking a look at the increasing jurisdictional expansion volume by region as well. Indonesia as well, which has been quite good, and of course China taking the various market share there as well. All right, and Bisalloy is exactly as I mentioned, expanding into a lot of new markets. All right, this chart doesn't mention that of course they're expanding, particularly also into the Middle East as well, Taiwan, South Korea, and of course, Eastern Europe being the new contracting space. I won't spend too much time on this one, but again, the main industry breakdown, if you want to take a look, the primary industry breakdown, 58% of revenue is generated from the mining sector. Actually, it's not necessarily defense. Defense is on about 21%. Not too much, right? But that is definitely looking to increase. And this is probably the most impressive slide of the whole type. They actually service quite a lot of clients, notable clients. A lot of these guys are listed on the ASX. You can see there, Rio Tinto, BHP, South32, Yancoal, another good stock as well. Oz Minerals, Newmont, etc. The list goes on. All of these guys are clients with Bisalloy Steel. So that's something to take a look at. None of these clients are going out of business anytime soon. So if you want to have a bit of certainty around consistent revenue, well, that's probably the best I can do for you. So over the last 5 years, I tend to change up the time period sometimes, but over the last 5 years, Bisalloy's share price in terms of capital growth is up about 108%. However, that does not take into account the upwards of 6% dividend yield that has been quite consistent over the last 5 years, which is of course also fully franked, which is pretty good. So I want to touch on our portfolios, see how they're going. We've changed up the layout a little bit. So you can see there the diversification of what we've got, particularly with our income portfolio. Our top picks within the income portfolio, just in capital growth, has returned about 29.4% year to date. Again, this is not inclusive of franking or dividends at all. This is just capital growth. We've done quite well on the income portfolio side of things, but our growth portfolio, our top one, which I can't tell you unless you sign up, but that's okay. Our top growth our top growth pick has returned over 62% year to date, just over the last 4 months. And our mining portfolio overall, our mining portfolio has done over the last 12 months, has actually performed the best, as would be expected, which is what I've been talking about in the commodity sector. Yep, if you just take a look at that. Well done. Yep, there we go. So our mining portfolio over the last 12 months has actually returned upwards of 50% over the last 12 months, but our top picks have returned over 39.9% over the last 4 months, which is pretty fantastic. Considering the market has been quite volatile and pretty horrible, can't really complain with that, can we? Lovely. And that's exactly what we try to do. We try to identify early what's going on, and we provide in-depth research on our particular stocks, what we're covering, as to why. And then, of course, you have your account managers and everybody else, and particularly our analyst team as well, who are able to help you out with that. It's not necessarily just about when to buy a stock, but when to sell it. So I don't want to spend too much on this because I don't like to talk myself up, but if you can go to the next slide, my friend. There we go. You can see a couple of our reviews, which have been quite good. 5 stars. A lot of our clients, the clients that actually take full advantage, take full value of the services and the value that we provide, have been really, really happy. You can see here on the next one, I actually get a mention there, which is quite good. I'm pretty happy with that. But overall, what sets us apart, we have, we build that long-term wealth with not just our investment recommendations, but also the service and the reputability that we can provide. We get those undervalued stocks as well, and you've got the members services particularly as well. So just as a final note, once again, thank you everyone for joining today's webinar. I know we've been a little bit busy over the last couple of weeks with Easter holidays and the long weekend, but just for you guys, appreciate the time. And just for that, you can fully take advantage of the discounts that we have on offer today. So the gold membership, we have a couple of memberships over here, just gold and diamond. Gold, of course, gets you access to your dedicated account manager, whomever picks up the phone that you decide when you decide to call through. But then, of course, once you come on board, you'll receive a dedicated account manager on speed dial, 9 to 5, Monday to Friday during business hours. You get access to the daily income finance report, the income report portfolio, the growth portfolio, and the ETF portfolio. But the best value for money, of course, is the diamond membership. Taking a look at the daily, the income growth, mining, which, as I mentioned before, is the best performing portfolio that we have, the ETF portfolio, defensive bear, technical analysis tools, and of course, portfolio reviews, where the vast majority of value is generated for a lot of our customers. So yeah, total 3-year diamond membership, which usually retails for $3,000 per annum. The best value membership that we've got. 3 years total, we're currently giving it to our members for $3,997 total for a 3-year, 36-month membership, which is pretty fantastic. It's really intense value, and we're really hopeful that all of you guys hopefully could come on board. So thank you again for joining this webinar. And if you have any questions, please feel free to give us a call or send us an email at admin@stockspecialist.com.au. Thank you so much for joining.